I typically just explain it as a new technology for money. Blockchain is actually much bigger. You can do many other things. But when you try to explain everything in one shot, it's generally more difficult. So it's a new technology for money that is community-driven. It has limited supply. It's it's somewhat mostly inflation-proof. It's actually a deflationary currency. And you also have many other use cases that traditional fiat currencies, traditional money cannot do, like global fundraising, like selling your art to a global audience through the blockchain, NFTs. So it has many new applications we have not even imagined yet. So it's really fitting to be talking about cryptocurrencies here. It's the money of the future. So that's basically how I would explain to a basic person, or to like a 5-year-old or somebody who's new.
Yeah, so then this gets me to my next question is, everyone understand, when you say money, everyone understand how it is valued, why is it valued, and so on. And with cryptocurrency in particular, there are different types of the crypto, some that are stable, some not so, some that are joke coins versus some that are utility coins. So how are they valued?
Right, so this is a very important point. Many people think of value in a actually not accurate way. The way I think about value, which may or may not be correct, is if something is used by people, then it has value. If something is not used by people, then it doesn't have value. So if you look at, doesn't matter if it's physical, real, or virtual. If you look at, for example, Facebook or Google, why does Google have value? Because people use it. It serves a purpose. It's a tool. We use it to find information. And the more that people use it, the more valuable it is. For something to have value, only one person needs to want it. But if that person suddenly doesn't want it anymore, then the value goes to zero. So it does not have very good liquidity. For something to have liquidity, a large number of people have to want it. So with cryptocurrencies today, I think the market size is probably about a few 100 million people all around the world who either use it, want it, or are willing to trade with it. So it has value. Bitcoin is valuable because it's used in many applications. Cross-border transactions, remittances, global fundraising, selling art, etc. Ethereum is valuable because of that. Different cryptocurrencies have different use cases. If they have a use case and people are using it, then it has value. And the way to determine value, the most accurate way to determine value, actually I shouldn't say accurate, the most fair way to determine value is actually just market driven. The exchange is a price discovery mechanism. It's not always the most accurate because the market sometimes overswing because of people's emotions. But we never know what the really accurate price is. I will follow up with another point people we are often raised with the value of cryptocurrencies, is that many people are creating many different cryptocurrencies. Does that dilute or does that impact the value of the existing cryptocurrencies? There's a fundamental point. When you create a new cryptocurrency that nobody wants to use, it doesn't matter. Because today, anybody can create a new currency. It's very easy. It takes 2 seconds. But just because you create a new coin doesn't mean that coin automatically has value. And if you just create a coin without doing anything else, that coin has zero value, and it's not going to impact anything. And if you build use cases for that coin and people use that coin, then that coin will have value. Does it dilute existing coins? Sometimes yes, sometimes no. Sometimes a little bit. It's like saying, look, if I create a new internet company, does it automatically dilute Google's valuations? Probably not to most extent. But if I'm creating a search engine that over time people are migrating to our platform, it may dilute that. But more often than not, if I create a new application that people use, that didn't exist before, so when Facebook was created, social media didn't decrease the value of Google. Social media increased the value of Google because it brought more people to the internet. So with more use cases, you can actually create value. So the total value in the world is not fixed. It's not like look, this much value in the world, and that's all we have. Anything new has to take away from something. The value of the internet industry is much bigger than the value of physical industries before that, like books or retail shops, etc. So value can be created, but value, there's also some overlap. So this is how I think about the value of cryptocurrencies.
All right. So then going back to point regarding its value, right? You've been trying to work a lot on getting some form of regulation when it comes to cryptocurrencies. How will that affect you and, in your opinion, the industry? And then I'll add just a sub-question. What is your sort of opinion on those that are against regulation for crypto consumption?
Right, I think so. As with any point, we shouldn't be too extreme. In life, there's usually a balance somewhere. If we have no regulations, then it's actually, I personally think if there's zero regulations in crypto, it's actually bad. Because as industry players, we don't know what to do, and there are situations where, like, should we offer this product? Should we not offer this product? What kind of limits should we set? You always have to have certain level of rules and guidelines for the industry to operate. There are also bad players in every industry, including the crypto industry, including traditional banking sectors, including any industry. How do we deal with those bad actors? What's the guiding rails? So we need to define that to some level. Even if with or without crypto regulations, like, okay, what coins do we list, and how do we fight what they call rug pulls in DeFi? So all of these issues we have to think about with or without regulation. With regulation, there's also, talking about regulation, there's good regulation, bad regulation. It's not like all regulations the same. We gotta look at, we gotta look at regulation country by country, sector by sector, etc. If the regulation says, okay, we're gonna ban crypto completely, that's generally not good. That's not good for our business, not good for the users, not good for this industry to grow. And if we say, so we need to find some medium where we have some guiding principles, we have some guiding rails, and we have so the industry players have clarity on what we can and cannot do. It's never 100% perfect, right? So we're never going to find a perfect balance. We're always going to be like too little, too much, and we adjust over time. We work with regulators all around the world and to try to collaborate over time so that we find a sweet spot where we can encourage the maximum amount of innovation while protecting users and also fighting back players. So today, the industry is so new. Today, I would still say the regulations in almost every part of the world about our industry, about crypto industry, is incomplete. Today, most of the regulations only look at KYC, AML, mostly main these two parts. These two parts are extremely important, but most of the regulations don't look at what I said, like listing frameworks for exchanges. What coins do we list? Security. How do we ensure our network security, physical security, employee social engineering security, wallet security? How do you manage funds? Should every exchange have an insurance fund for their users? How much should that be? How do we do customer support? How should we handle customer disputes? How should we do marketing? So there's many aspects of that's just a centralized exchange. And then most of the regulations are only looking at one small part of the centralized exchange. And beyond that, there's DeFi, there's NFTs, there's GameFi, there's SocialFi, there's a lot of other things. There's Metaverse. So, but again, we need to have the industry develop to a certain extent before regulations kick in, because regulators don't sit there and just dream up of future regulations or future industries that has not been fully developed yet. So that's understandable. So in that context, I think it's extremely important for industry players to be working very closely with regulators and to work this out. Some regulators in the world, they have a they view that they can just make up regulations without consulting industry players, and that's generally not good. They will very often make regulations that doesn't fit the industry. Some regulators, like the local regulators in Dubai, in UAE, and in many parts of the world, they're very smart about this. So they understand that this conversation needs to happen. This is why we feel very comfortable here. We feel that we do have our voice, we have communication channels, and that to us is actually more important than what the regulations today are, because the regulations will have to adjust over time.
Then let me ask you, 5, 10 years down the line, in your opinion, what would be that sweet spot? What in this perfect scenario that CZ has of the best regulation, of the best sort of work ecosystem for Binance?
Sure. I think the industry is going to continue to evolve. There's going to be many new sectors, right? So last year we seen NFTs. If you asked me 2 years ago, I would say NFTs, I wasn't sure it's going to be big or not. 2 years ago was DeFi, and then a couple of years ago was like ICOs. So I think the best way is to say, hey, we're going to allow for some disruption. We're going to allow for some even negative impact. But by and large, we should hold 90, 95, 99%. We should encourage people to adopt this new technology, but we should adopt it in a safe way. How do we safely regulate centralized exchanges? How do we safely regulate even DeFi, right? I'm not sure. I don't exactly know what that looks like, to be very frank. For DeFi, do we encourage it? Do we allow people? If we have regulations that are very open, people actually will be more transparent. When we have regulations that are very, when we say let's say a regulator says we're going to ban DeFi. Guess what? All the DeFi innovation is going to happen in Russia or China, where the regulators may have limited reach. It's very easy to deploy a smart contract anonymously and you just fork a code and deploy it. So I think the best regulation would be let's allow for the innovation and let's fight the bad players together. We do have law enforcement collaborations. In any sector, we have bad actors. There should be a level of disclosure, both for people who are issuing coins, people doing projects, people raising money, people selling NFTs. There should be a level of information sharing with different with governments, but there's a balance between privacy. I do believe privacy is a fundamental human right. And so it's just achieving that balance in every new sector. NFTs. So there's many new things that will come. So I don't think that I don't have the right answer. Like, what is the best regulation 5 years from now? What is it? I cannot write a document like that.
Don't you have a taste for what it would be like?
Not really, because even if you ask me to write a document like that, I can't. Even if you ask any regulator to write a document like that, they can't. It's just impossible technically. I think what we can say today, what the best regulations are, let's allow centralized exchanges. Let's follow the KYC, AML standards of banks, and let's do it better in the blockchain world. And then on top of that, let's see how do we solve some of the other problems. How should centralized exchanges share data with law enforcement to catch some of the rug pulls in the DeFi space? How should we allow ICOs in local regions? How do we attract entrepreneurs? How do we help entrepreneurs to raise money? But at the same time, what level of information disclosure do they need to do? But at the same time, how do we protect them if they just fail the project legitimately? 90% of startup projects fail. But how do we prevent scams? How do we educate the retail users so that they don't get hurt? So all of these things we need to work together on. There are many ways to do this. We need to balance. For example, many regulators say, okay, my job is very easy. I'm going to stop everything. I'm just going to reduce risk. And how do you reduce risk? By banning everything. But that's actually not reducing risk. By not adopting this new industry, you risk losing the future, which is very apt given that where we're talking here today. If you don't have the future, if you don't develop the future of money, if you don't develop the future of fintech in your local economy, every other sector, be it retail, gaming, logistics, real estate, all this. If you don't have a strong fintech sector in the future, all your other economic sectors will be very negatively impacted. So by banning everything, you're actually taking the biggest risk against the future. You'll be left out of the future. And but the problem is today is some regulators they view their responsibilities as just sitting out their term. Maybe like a few years, and then they just wish nothing happens, and then they move on to the next job. That's a bad mentality. The strong regulators take economic development as their core responsibility. We got to protect the consumers, but we also got to develop the economy. So those type of mindsets are very important. So that's what we look for when we collaborate with different governments, different regulators. And to be very frank, that's why we're here. I think we've seen that in the best way here.
All right. So you mentioned, just one last question on regulation. One challenge that regulation has in general is that is the effort to become proactive and sort of work with that. You touched upon that a bit earlier, where where regulators have to come together with you, right? What other forms as well that can help regulation become more proactive in this space?
Yeah, I think for regulators especially, they need to talk to industry players. So, but more importantly, they need to understand the industry. So they need to download a wallet, transfer money, transfer some Bitcoins here and there, and play with DeFi, maybe get a couple of NFT. You can read about it, but if you have not had an NFT in your wallet, you probably only have a vague idea of what that looks like. Many regulators, they understand traditional financial industries, and they think of our industry, they think it's the same. It's not quite exactly the same. I've had conversations even very recently with people who think that every single address belongs to an account, and it's only generated by a centralized exchange or something. I had to explain to them, hey, anybody can download a piece of software online, and they can actually even fork the software, compile it themselves, and then just generate an address themselves. So I think understanding the technology, playing with it, whether they like it or not, but not play with it and then come to conclusions whether they like it or not. But their own opinions may or may not matter that much. They need to talk to users as well. They need to talk to communities, people in the community, etc. So all of those things matter. And so I mean. Here, we do get that very proactive approach by regulators. I was invited to do this talk by a minister here, and I very gladly accepted 2 seconds later, and then a week later I'm here. So so I think that level of collaboration is really, really important, and that level of curiosity, and without preconceived positive or negative notions, just understanding the technology. And also the humbleness is quite important. Sometimes your own personal views, as a regulator that's responsible for a population of people, you have to value people's opinion over your own sometimes. So many people lose sight of that. They get a bit overly arrogant. They get a bit overly self-confident. And it happens to all of us. But I think just having that mindset is really, really important.
So, just before we switch off to talk a bit about NFTs, I do wanted to get your opinion on our current global geopolitical aspects going to affect the prices, in particular when it comes to Bitcoin. We've saw it stabilize a little bit recently, but just wanted to hear your thoughts on that.
Yeah, so we're in a very tricky situation right now, right? Especially given what's happening right now, like a couple hours ago. So I think there's a few different aspects to it. Logically speaking, a technology-driven, blockchain-driven currency is actually would shine in a uncertain, unstable geopolitical environment, because Bitcoin is neutral. It doesn't have borders. It doesn't side with anybody, and it can be used in any country, everywhere. And so, in theory, that should actually hold value much better than gold. But today, I think why did the Bitcoin price drop with the overall market? Most people, I think today of the global population, probably only 3 to 5% of people are in crypto. And of that 3 to 5%, only a small number of them are really die-hard crypto OGs. Many people still view crypto as an investment that goes up and down in price, and so they're fairly early into the crypto journey. Given the small market size, when the overall market is, when the global markets are tanking, the stock market is tanking everywhere, the currency is tanking everywhere, people need to pull out cash. People want to keep cash, and also given the relatively low adoption rate of crypto, still in a very tight spot. Let's say you need to buy an airplane ticket, and it's really like high demand. Today, you may find more counterparties that may be willing to accept a gold bar instead of crypto today. Even though crypto technologically is more superior in the future, but given it's only 3% adoption globally, likely you're going to find 97 guys, or 97% more likely to find a guy that will just accept a gold bar than giving them a Bitcoin. And so this is why gold price went up, but Bitcoin price didn't today, well, at least not much. So we have to take some consideration of this kind of dynamics in play. It's not just, in my opinion, which could be wrong, it's not just that Bitcoin is inferior. I think Bitcoin is far superior to gold. It's much easier to carry, it's much easier to transact. You don't have to carry a physical gold bar with you, etc. But today the situation is good. We're still so early in this adoption curve, with probably like 3-5% adoption rate. Given that, in a real tight spot emergency situation, like when there's war, when there's political instability, people still go for the traditional thing that more people understand. So I think that's kind of my view on the pricing, on the nature of it.
All right, cool. Thank you for that. I think it's a good segue to shift to NFTs. And in particular, I would love to understand your opinion on what is NFT. Is it art? Is it a piece of furniture? Go on.
Sure. I'm not an expert on NFTs, so just disclaimer.
Yeah, that's why I want to get your opinion.
Yeah. So NFT fundamentally is a technology that says, okay, there's one thing, it's one non-dividable thing, and you can verify 100% you own it using the blockchain, which is high degree of trustness. That's it really. So that's all the technology. But because it lives on the blockchain, because it's the first time we actually had this technology. So now, if you buy a Mona Lisa painting, you have to worry about if it's real or not. You have to worry, and there will be a history of other owners in front of you, before you that will piece together a story. But then again, everybody's version of that may be different. With NFTs now, you know that NFT you hold, whatever it represents, you own it 100%. And that story is written on the blockchain. You know which are the previous owners who owned it. So given that, somehow it just took off. I think there's a number of reasons that it takes off. Many of these are my opinions or I learned from other people, so I could be wrong. Say, first of all, NFTs could represent a digital art, or like, an image, a 3D thing, a virtual reality thing. You can right-click and copy that image. You can save a different version of the VR. When you right-click and copy that image, you can use it, but probably not for commercial purposes. But if you use it in your online avatar or something, probably people will not care. But when you own that NFT, you probably actually want other people to use that image as much as possible, because now it's more widespread. When you right-click and save it, you don't own the NFT. So for example, the everyday art created by, what's his name? Okay, it's not on my tongue, but the guy who bought it, Meta Koven, Vignesh, I met him in Singapore in person. When people said he was going to be at a party, I was going to at a different party, so we just organized a schedule to meet. If you just right-click and save that image, probably nobody will meet you. When you spend $69 million to buy that NFT, you're the NFT owner, a lot of guys will want to meet you. So even though he's very low-key, he actually didn't want to be known, but people dug him out. But when you own that, you have that level of access and network, which you don't own by right-clicking, saving something. And NFTs can represent anything. It can be digital art, it can be physical stuff, it can be associated with physical stuff. If you trust that association, most of the time people trust it. But there's many use cases of NFTs that I think we have not even explored at all. For example, tickets. The tickets for entering into this place can be NFTs. So you can use it. After you use it, you still have the NFT. So it's used, but you have that story, and you can potentially still sell it. And some people may collect it, depending on who you are or how it was used. And and there's many. And NFTs also transcend games or environments they're created. So you can have NFT in one game, or not even in a game today. That may be later on used in a new game that has not been written today, and then that might have value. Previously, if you own a virtual asset in a game, when that game stops being popular, that asset dies together with the ecosystem. But given NFTs now, because you can transact them on the blockchain, the blockchain will transcend that game or that environment. So there's many new use cases of NFTs that we have not imagined. And today, to be very honest, I might get a lot of a slashback for saying this. Many of the NFTs are probably overpriced. Many of them most likely will drop. But there probably will be a few that will go up exponentially over time because we are still in the first generations of NFTs. 10, 20 years later, this generation of NFTs may be worth a lot, but I don't think that's going to be all of them. I think most of them, like startup projects, most of them will go to zero. Like ICOs, most of the coins will go to zero, but the few that do well will do really well to carry the industry and to make the industry bigger, to create more value. So that's my sort of a superficial understanding of NFTs.
It's still a great it's still a great understanding nonetheless. I think one point that you mentioned at the beginning was, and this goes as well for crypto, is uniqueness is very important, right? There's just a finite amount of Bitcoin, for example, out there, and you can only buy a specific NFT, right? How do you guarantee uniqueness?
So the technology self-guarantee that NFT, whatever that one you hold, whatever that NFT cannot be replicated, cannot be faked, cannot be duplicated. So that technology is quite, we can get into the technical aspects of it. I actually don't really know how technically it's done. But this is like driving a car. I think we have many geeks, technology guys who are validating that. That part is quite certain. Whether you trust that the issue of that making sure that the NFT represent whatever they represent is truthful, that still requires you trust in the creator of that in most cases. So that's just how the technology works.
So, and I want to understand a bit of your outlook in particular when it comes to the metaverse, right? You can use crypto as a viable sort of means of transaction in the metaverse. And I want to at least get, superficial at least, your outlook on how will that look like down the line?
Yeah, sure. So first of all, today nobody knows what a metaverse really looks like. There's many different metaverses. So I think we're still at the exploration stage. I think this is at the beginning, this is like, probably pre-Facebook days of social networks or pre-Google days of internet. So we're still like, we don't know which one's that dominant product that people all use, or which few are the dominant platforms people all use. So what is the metaverse going to look like? Is it like virtual reality where everyone has to wear a VR headset? I don't think so. Today that's very, very popular among kids, but we don't walk around with virtual VR headsets. Is there some other thing that works on a mobile phone? I'm not sure yet. But what's certain is there's many people working on this, and in this new whatever that new thing is, or whatever that those new things are, cryptocurrency will be a fundamental thing in there. Because now it doesn't matter if it's games, metaverse, virtual reality. They have a few fundamental properties. Number one, they're very global. So those things have no borders. If you develop a game, anybody in the world should be able to play your game. They should be able to just download that game, download that game. Now, If you develop a game that allows people to download and pay in 200 countries, you will find out getting all the payment networks to work is actually quite difficult. If you adopt Bitcoin, you will have literally it's like half an hour of work to integrate with a Bitcoin wallet. Now, guess what? People in 200 countries or 180 something countries, probably one less soon, that they can pay using cryptocurrency, and you get that level of access. So which one's easier? Not sure. Well, there's trade-offs. But there's certain advantages of using cryptocurrencies. And now when people tip each other, when people interact with each other, traditionally in games, you don't have that currency aspect. You have a token aspect. You have the sort of you have points. You have rankings. You have that what do you call it? The respect aspect. But today you can add a financial aspect to it using cryptocurrencies. That's a very strong tool. And then you can do referral programs. So if you're a big player, and you lead a guild, and you're a KOL in the community, and you can get paid, you can monetize your influence directly. So you no longer need to sell ads. You no longer need to sell data. You can now respect your users' privacy, but you can monetize through cryptocurrency directly. You bring more users into one either metaverse or a gaming community. You hold the token for that community. The more users you can bring, the more likely, because now there's more demand for that token. The price of that token most likely will go up. Logically, it should. And then you probably hold a large number of that tokens. You either get paid for those referrals, and then the value appreciates. So that dynamic makes a hugely sticky community. Many people don't understand this yet. But the people who do, the games that use this well actually are extremely sticky. To the point where we have families in the Philippines and in Indonesia. Before it was just a 14-year-old son playing games, and the mom always yelling at the kid. Now the kid is making a couple $100 per month, which is pretty significant for those regions. And we have the entire family playing those games, and they're making enough money to buy a house. So you have that's a bit overboard, to be honest. But but you have this kind of dynamics that wasn't available to Web 2.0 companies, to Web 2.0 games, virtual reality builders. Now in the metaverse, this is the native cryptocurrency. There's a native currency.
I'm glad you mentioned this particular trend of the example that you just mentioned. What other examples are you seeing out there that are either case studies or trends that you're seeing now that excites you the most?
I see a lot of different trends. DeFi, it was hot 2 years ago. Now people don't talk about it as much, but it's actually growing tremendously. DeFi today accounts for about 12% of trading volumes, even compared to the CeFi. So of all the DeFis that were combined, now of all the CeFis that were combined, DeFi occupies 12% of transaction volumes. And if you look at some of the bigger DeFi projects, they occupy they do 5-10% of our volumes, which is very significant. So this aspect is growing, so even though everyone's talking about NFTs today, but the previous ones are still growing. So I think those are very, very interesting. There's also many new trends. I wouldn't talk about them today just yet because I don't want to speculate. I get them wrong all the time. But there's also some other fundamental problems we haven't solved yet. Today, I believe the biggest limitation factor for our industry to grow is actually how the difficulty of holding your own wallet securely. How to hold up the backup key securely. How do you prevent? How do you deal with cases where you lose your computer or you lose your device? We don't live forever. When we pass away, how do we pass it to our kids in a safe way? So we need to solve those kind of very fundamental, basic problems. And there's a number of initiatives in that area. So those things really excite me. Yeah.
Thank you for that. I would like to hear from you. What would you say to those that say this may be a bubble? Will it burst?
I think anything is possibly a bubble, but if you use a much wider definition of a bubble, we have had dynasties. Through our history, many dynasties, many currencies have came and Any technology could come and go. There's true bubbles like tulip, right? Okay, and there's things that come and got evolved out. For example, horses were very useful. Is horses a bubble or not? It served its purpose at that time. And even today, people still use horses for entertainment, but horses are by and large no longer a means for common transportation. But is horses a bubble? That's probably not. But the horses, we evolved beyond that. We had cars, we have airplanes, we have space shuttles, whatever. So I believe cryptocurrencies, blockchain is no longer a bubble. Even if there's a newer technology that replaces it, it just means we evolved through that. That's not a bubble. Today, will it just go away? I think with a couple 100 million people using and adopting cryptocurrencies, and there's a very large group of die-hard cryptocurrency fans, and they're technologists, they're building applications. There are people who are the entrepreneurs. There are government officials. They're pushing this forward. They're real use cases. It's not global transactions, cross-border remittances, global fundraising, helping artists and content creators to monetize their work. All of these things are real use cases. I don't think they will go away.
Thank you for that. So, since we're in the Museum of the Future, there's a field in foresight called super forecasting. So I'd like to take this opportunity and ask, on behalf of everyone who's interested in crypto, what are your predictions of the cost of Bitcoin and everything for next year?
Yeah. I don't think you guys will be clapping after you hear my answer. So I did read the book Super Forecasters. It's a fantastic book, and it's fascinating how people make forecasts. I think there's a science to it, and if you read the book, it talks about what kind of people are good at forecasting. And after I read that book, I'm like, I'm definitely not one of those guys. So I've always said I can't predict the future, not even 6 months from now. But I can see the general direction. There's more and more people coming into this industry. It's a technology. It's a new technology and with technologies, there's a few things. There's a few fundamental properties. Once a couple 100 million people have these concepts in their head, you can't erase it. We don't have an erase button. As much as some people may want to erase this concept, delete it, etc. You can shut down the internet today. There will be internet 2, there will be internet 3, there will be low Earth orbit satellites that will have an internet, there will be shortwave radios that will build an internet. Once we know the concept, once enough people know the concept, you can't erase it from the population's heads. So you can kill Bitcoin today. There will be, there's already like millions of other coins. People will build another blockchain, another coin that's probably even better than Bitcoin potentially. So you can't erase it. You can't erase things. So I just think the industry will grow. How fast, how slow, I don't know. But I'm very confident the industry will continue to grow. There's more and more innovators. This trend is very clear. We see more and more people joining. The speed of people joining this industry is faster than people leaving, almost very few. There are people who come to trade for a little while and then they may make money, they may lose money. The people who lose money may stop trading for a while. But the people who come in for the technology innovation, who are adopting this for the real use cases, once those guys come in, I've seen very few of them leave. So the industry is growing. So based on that, the prices go up and down based on sentiment, based on geopolitical events, that's just market volatility. I always advise people: if you're not a trader, if your day job is not a trader, don't trade. Just because you're suddenly coming to cryptocurrencies doesn't make you a better trader. So if you're not a professional trader in the stock market, in the traditional industry, you're not going to suddenly become a better trader in the cryptocurrencies industry. Just buy and hold. Even though our main business, all our revenue comes from traders, but I always encourage people not to trade. Just hold. And also you don't have to hold it if you don't like it. Only hold if you like it. So only hold if you use it if you think there's value. My opinion could be wrong. Don't believe what other people say. Always learn for yourselves. So price-wise, look at the long term. I believe there will be more and more demand, more and more people, and I'm always a optimist. How do you say that?
Optimist.
Optimist. Yes. So so that's how I see things. Yeah.
All right. I don't think I could have ended it any better. Susie, thank you very much, and thank you everyone for making it today. And we hope you have a wonderful day. That's all for us. And ma'as salam. Thank you.